guess we get this thing started. I want to thank everybody for joining this afternoon. This was put together primarily for Virtua Hospital. I've been doing seminars at Virtua for at least 5 years now, maybe 6. We did the first 3, maybe 4 were in person, and that was great. The first one, we had over 100 people signed up. We had almost a full auditorium. We did that one in Mount Laurel on Route 73, and then we moved over to Evesham to do it at those locations. So what we're going to do today is just educate. This is an educational seminar. I just want to stress it. We're not going to try to sell you anything. We're not going to, we just want to educate you on what's happening. Most people here are getting ready to retire and have a lot of questions maybe about Medicare and what's going to happen when they're retirement. And all I can assure you is that there's some great opportunities that you're going to have great medical coverage even in retirement. I'm going to be doing this partially with myself and my son, Justin. Justin's been a partner with us for the last 6 years. And I've been in the business for 32 years. I do want to encourage you, if you do have any questions during this, there's a Q&A box at the bottom. You go down to the Q&A box and you put in your question, and we will be looking at questions throughout the seminar and stopping and answering questions. Whatever you have, ask. I also want to mention up front that I make myself available to everybody at Virtua. And I probably have had 400 or 500 phone calls over the years, just questions. People have questions. What do I do? My spouse is turning 65. Do they have to go on Medicare? Do we have to sign up for Medicare? Is it better to be on Medicare or to stay on the group health insurance? And those are questions that I don't. There's no charge for it. Call the office for a consultation. What we do like is if at some point in time when you do need your Medicare supplement and you're ready to get on Medicare, that you do think of us and you give us a call, and that's the only time we get compensated. But otherwise, I am here to help you, and my son is here. We do have a staff of people to answer questions if anything comes up about Medicare. So always feel free to give us a call, and there's absolutely no charge to call our office. All right. So let's get started with this. Senior Advisors was founded in 2009. Prior to that, I have over 30 years in the health insurance industry. I've been going to Washington for probably 30 years now, lobbying in both Washington and in Trenton. Justin also has been very active in Washington. Justin is the vice chair of the Medicare Advisory Board of the National Association of Health Underwriters. And Justin has had several meetings personally with CMS, Centers of Medicare and Medicaid Services. He just had one 2 weeks ago, a conference call with CMS, making some suggestions how they can improve their coordination with Social Security and getting Medicare numbers out faster to individuals when they do apply for Medicare. So we do have great coordination and relationships with Washington D.C. On this situation. So there are 2 offices in New Jersey. Justin works out of the Cranford office in North Jersey. I'm in Moorestown, right on Main Street in Moorestown. Been there for probably 28 years in that same building, right next to the new Chase Bank they built across from the CVS on West Main Street. In the last year and a half, we did open an office in Phoenix, Arizona. I'm actually been out there for the last 2 weeks. So I'll be coming home this weekend, but I'm right now in sunny Scottsdale. So the weather here is gorgeous. I don't know what's happening in New Jersey, but I guess I'll find out this weekend. We're licensed in over 30 states. As you can see from this map, we can help people throughout most of the United States. Up and down the whole East Coast as people relocate and they retire and they want to go south to Florida, the Carolinas. That's nothing for us. We could help them wherever they are. We work with all the major insurance companies. We work with Aetna, Cigna, Mutual of Omaha, Horizon Blue Cross, United Healthcare, and some other companies. We assist you directing you how to get set up with your Medicare Part A, Part B, and then we explain Medigap plans, which is also called Medicare supplements, and Medicare Advantage plans, and Medicare Part D, which is the drug card. All right, this seminar we're going to cover. Do you want to go back for a second, Justin? No, all right, skip the slide. Okay. We're going to go over Medicare, Medicare supplements, Medicare Part D, prescription drug plans, and then we'll recap it at the end. Justin will take over the prescription drug plans. He does a great illustration on how important that is. Okay, so Medicare Part A, it's inpatient care. So Medicare Part A covers you if you went in the hospital. Also covers you if you get transferred from hospital stay to skilled care. That's what Part A is going to cover. Usually Part A is free. As long as you've worked and you paid into the Medicare system for 40 quarters or 10 years, Medicare Part A is free. Medicare Part B, you do have to buy. That covers everything outside the hospital. It covers all your doctors, your tests, your labs, and expensive items, MRIs, CAT scans, and your very expensive items like infusion therapy, which would be your chemotherapy, radiation treatments. That's all under Medicare Part B, and there is a cost for Part B to the federal government. Most people pay $170.10 a month this year. We will get into that a little later, next couple of slides, but it is income adjusted based on your income. It could be more than the 170, and we'll discuss that in a minute. Your Part C of Medicare are Medicare Advantage plans, and we'll get in more detail into that. A Medicare Advantage plan is sold by an insurance company. You're no longer going to use your Medicare ID card. You're going to buy a plan from an insurance company, and that will be your Medicare, your ID card, whether it's Blue Cross, Aetna, United Healthcare. That's going to take over, and it's a managed care plan. We will get into a lot more detail on Medicare Advantage plans. Part D prescription drug, that again is bought through an insurance company that sells drug cards. We have 25 different drug cards in the state of New Jersey, and we help our clients every year review their drug cards, make sure they have the best drug card going forward. You are allowed to change your drug card once a year, and that has its own separate premium. And there is a charge for people that are over the minimum income that the government will charge you an income adjusted amount, and we'll get into that in a minute also. All right, so this is what I was talking about, income adjusted amount. So if you file single and you make over 91,000, a couple make over 182,000, you'll have to pay more than the 170. If you fall below those numbers, you pay the 170.10, which probably 88% of the country pays the 170.10. If you're over the 91 or the 182 up to 228 as a couple, it goes up, about $60 to 238, and then it goes up higher. And if you're in that fifth bracket, over 340,000 as a couple or 170 as a single, you're up to $544 that you're going to be paying the government every single month. How do they determine how much money you're making? The IRS, the Social Security goes to the IRS, they pull your tax return from 2 years ago. So this table is based on 2020 modified adjusted gross income that you reported to the IRS in 2020. So these are the income adjusted amounts that you have to pay for Part B. Now, I mentioned also that you might have to pay extra for a drug card if you're over above those first tier level. An income adjusted amount on the drug card is our next slide. Okay, so if you're under 91 single or 182 as a couple, you would just pay a premium to the drug card company for your card. In the next bracket, you could be paying another $12 a month, another $32, $51, $71, as much as $77, $90 more over and above what you're paying on the Part B. And again, that's based on your income from 2020. So here's what you pay total. You put the Part D income adjusted with the Part B income adjusted, and the first bracket above the 182 is $250, then it's $372 a month. Getting back to the level 5 where you're $340 to $750,000, that's $615 a month you're going to be paying the government. And if you're at the top bracket, you'd be paying $656 a month. So if it's a husband and wife, that's $1,300 a month you're going to be paying the federal government just to get your Medicare benefits without anything else, as far as a Medicare supplement or a prescription drug card. This sometimes is a shock to individuals. We constantly have people say, "Oh, I thought Medicare was free." Well, Medicare is not free. you're going to be paying something for your Medicare. And if you're at the base level, it's 170. But again, if you're at a higher income bracket, and we're going to talk about the other question that comes up all the time, well, I'm retiring. I'm not going to be making $300,000 anymore in retirement. I'm looking to make $200,000. And we're going to discuss that also. All right, so okay, if you retire and your income drops, you have the right to appeal this. You'll get a letter from Social Security every year, late November. You get your report for next year. So this coming November, you get a statement for 2023. Based on what you made for next year, based on what you made in 2021, you will be paying $600 a month to Medicare for your Medicare benefits. Well, you know what? I'm retiring. I'm not going to make, what was that, $350,000. Well, you have the right to appeal it. You got a 30-day window. It says if you disagree or if anything else has changed, you should appeal it. You should definitely just appeal it and send in a letter stating that you're retired, or you have reduced hours and you will not be making what you made 2 years previously, and you're going to be making below the $200,000 or below the $182,000. So you want to get your amount adjusted by the government. Do not wait to 2 years until this happens. You should do it immediately once you get that statement. Okay, so when should you apply? First of all, this window applies to people that are turning 65 that do not have any type of group health insurance. So most of the people on here are still working and they have group health insurance. If you have group health insurance with a company with 20 or more employees, which definitely Virtua has more than 20, you do not have to apply for your Medicare at this point in time. So you could hold off. You could apply for your Medicare Part A, and there's nothing wrong with that. You go online at socialsecurity.gov, ssa.gov, and apply for Part A only. And you're not going to be paying for it. The benefit of doing it now when you're first turning 65 is you will have your Medicare number, and it'll make it easier at a later date when you apply for your Part B. We'll discuss that in a minute. Now, again, getting back to this illustration pertains to people that are turning 65 that do not have group health insurance. So even if you're a spouse and you're on your spouse's group health insurance and the company has more than 20 employees, you do not have to apply for Medicare Part B when you're turning 65. So this example, you're turning 65 September 10th. The first of every month is when you're eligible for Medicare. All right. If your birthday is on the first of the month, you're eligible the month before. So you would be eligible a month early. But right now, based on this example, you're eligible September 1st. You could enroll 3 months before your eligibility date, which would be anytime after June 1st. Again, you go on the ssa.gov website and you could enroll. You could also enroll 3 months after, and you're still in the initial enrollment period. As of right now, the government makes you wait before they give you the Part B. For every month you wait beyond the month of September. And that's going to change next January, where there won't be that waiting period, but right now there is a waiting period. So example, if you wait 3 months after your effective date, they're going to make you wait another 3 months before they give you your Part B. So, you should do it if you're not on a group health insurance plan, you're turning 65, that's what this is for. So this is what we talked about, and it's changing next year. But right now, the most important thing is just apply if you need it when you're 65. And who pays first? If you work for a small company, less than 20 employees, you do have to have Medicare. It is a requirement. The insurance companies that you have your health insurance with will expect you to have Medicare, and Medicare pays first. However, if you work at a large company such as Virtua, your group health insurance plan is always primary. You do not have to sign up for Medicare. There will be no penalty at a later date if you don't sign up for Medicare, as long as you're able to prove that you've had group health insurance. If there's a disabled individual, maybe a spouse is disabled, Medicare is primary if the employer has less than 100 employees. But if the employer has 100 or more employees, the group health insurance is still primary. So at Virtua Hospital, if somebody's spouse is disabled and on Medicare, Social Security, disability under the age of 65, the group health insurance is still primary. If you're retired and you're on any type of retiree plan, Medicare is always primary. And if you go on COBRA, Medicare is also primary for everybody on COBRA. So this is very important. But again, most people on this call are virtual employees. You have a large group health insurance plan, so your group health insurance is primary. You know, some of the quick questions, some of the questions that come up, you know, is it better to go on Medicare? You have a very rich plan at Virtua. You don't pay that much. Now, I have seen some part-timers who have to pay more money to be on the group health insurance. So you know, it could be a possibility where it makes more sense to not be on the group plan. You have the right as the employees to drop the group plan. You cannot be kicked off the group plan. The only time I would suggest anybody considering dropping a group health insurance plan is if they were paying a lot of money. Maybe a lot of companies add a premium on to keep a spouse covered or dependents covered. So maybe, you know, in some cases, it might be cheaper to take the spouse that's turning 65 and put that spouse on Medicare. Those are things we can discuss, but overall, I think, you know, it's probably better, especially, you know, as a virtual employee, you just stay on the group health insurance until you get time to retire. If you're turning 65 and you're already signed up for Social Security, Medicare will send you your Medicare card automatically 3 or 4 months in advance with both Part A and Part B. If you do not want the Part B, you have to send it back and say, I don't want it at this time. And you have to return it and tell them you don't want Part B. So that's very important, or else they're going to start charging you immediately and deducted it the first of the month that you're 65, deduct $170 or whatever it is out of your Social Security check. If you're turning 65, you go to the Social Security website, which is ssa.gov. You can go to the benefits/Medicare website and just enroll. There's a drop-down menu on the basic ssa.gov site, and you just want to apply for Medicare benefits and go right through and fill out all the information. You could also use that same thing just to sign up for Part A. The only time you would not want to sign up for Part A at 65 is if you are part of a health savings account, which is a high deductible plan. If you're in a high deductible plan, you can no longer contribute to that health savings account if you have Medicare in place, Part A. So that's the only time we would tell you not to sign up for Part A, but I don't believe Virtua has never had a high deductible health savings account. So it isn't something that, you know, you should be that concerned about. And again, better to just sign up and get the Part A. If you're over 65, you're still working, and you decide to retire at 67, 68, 70 years old, there's one other step that you have to do. There's a one-page form that you have to get your HR department at Virtua to complete. It's just they complete in your dates of employment and your dates that you've had group health insurance, and you can bring that to your local Social Security office. And there's another form that you request your Part B to start. And that form where you request the Part B to start, they do ask for your Medicare number at the top. So it's better if you already have the number to just put in your Medicare number, and then you put in if you want the Medicare to start your Part B, you can actually request the date. So you can say, you know, you do it now and say, I want June 1st or I want July 1st, you put it in the remarks section. So that is one extra step. We were having people fax it into Social Security, but now that the offices have just recently opened in the last couple of weeks, we've always advised it's better to actually, you know, take these into the local Social Security office and request them to start the Part B. Make sure somebody gets it in their hands and starts working on it. Also, on that form, if there's a spouse involved, you need one of those forms completed for both the employee and the spouse to show that you both have had group health insurance. All right, so what happens when you decide you're going to go on Medicare? You have two routes to go. You can keep your Medicare card, which has the original, your Part A and Part B, that's your original Medicare card. And Part A, as we said, is hospital, and Part B is your outpatient medical. You should have a prescription drug card. We're going to get into more detail on that later, but if you do not take a prescription drug card, you will be penalized by the government at a later date when you do go to get your prescription drug card. So even if you don't take prescriptions, take a $12, $7 prescription drug card just to protect yourself so you don't get penalized at a later date. And then we highly recommend that you get a Medicare supplement or a Medigap policy. Medigap policy and Medicare supplements are the exact same thing. They're interchangeable names. They mean the exact same thing. They will pick up, and we'll get into that in a little more detail, the 20% and deductibles not covered by basic Medicare. And as far as I'm concerned, that is the best medical coverage you can have. The other option is going to the Part C that we talked about before, which are Medicare Advantage plans. These are managed care plans. They're like HMOs and PPOs, where you're going to be in a network. You're no longer in the Medicare network. Medicare's network is the whole United States of America. Every hospital in the country takes basic Medicare. 88 to 89% of doctors take basic Medicare. You go to a Medicare Advantage plan and you buy Aetna, United Healthcare, Blue Cross. You're in the network of providers that take that Aetna plan or the Blue Cross plan or United Healthcare. And it's not all the United Healthcare doctors, it's the Medicare providers that accept that Medicare Advantage plan. Some of the plans are limited to the state of New Jersey, and you don't have access even across the river to Philadelphia. The better Medicare Advantage plans would give you access outside the state of New Jersey. I would never encourage anybody to take a Medicare Advantage plan that restricts you to just the state of New Jersey. And you do have, there's a lot of places that you can't even use your Medicare Advantage. All right, so what is the relationship between or comparing a Medicare Advantage to Medicare Supplement? As I said before, your Medicare Advantage plan replaces your Medicare ID card. You will no longer use it. You still have to pay your Medicare Part B rate to the federal government. But, and then when you go into the doctor's office, you're going to show them your Blue Cross card or your Aetna card or your United Healthcare card. You're no longer going to be showing them a Medicare card because they no longer bill Medicare. The way Medicare Advantage plans work, the Medicare Advantage companies get a lump sum amount from the insurance companies. It's approximately, could be $1,000 a month per person that they sign up for their Medicare Advantage plans. And the government says to the insurance company, okay, they're your responsibility now. You pay all their claims. So that's where it becomes a managed care plan where the insurance company is going to make decisions on whether or not you could have that MRI, you could get that test, you can get that nuclear stress test. So the Aetnas and Blue Crosses of the world are making decisions on your care and whether or not you could get it. Is there a private network? There's no private network with original Medicare, but it is with your Advantage. Referrals required? Nothing with Medicare A and B. Some of the Advantage plans have referrals. A lot are open access now that don't require referrals. Part D included? No, you need to get a separate Part D card when you have a supplement. Most of the Advantage plans come with a drug card included. Monthly premiums. Monthly premiums on supplements vary, but they are definitely, usually higher than the Advantage plan. Advantage plans can be as much as little as $0 per month. There's $39, $59, $79, $129, $159. It's all different Medicare Advantage plans out there as far as premiums go, but they are less money up front. Well, how much are you going to be out of pocket if you get sick on a Medicare supplement, a Medicare plan with a supplement? It's minimal, and we're going to get into that in more detail. You're going to have maybe a few $100s out of pocket. How much are you going to have with an Advantage plan? Now, the government allows up to $7,550 out of pocket on a Medicare Advantage plan. And how do you reach that $7,500? Well, you're going to have copays or whatever you do. Maybe a doctor's only $10. A specialist could be $40 or $50. Every day you go in the hospital, you're going to spend $300 to $400 per day in the hospital. An MRI could be $200 to $250. The big items are Part B drugs, such as all your infusion therapies fall under Medicare Part B. You have to pay 20% of all your drugs that are covered under Medicare Part B on a Medicare Advantage plan. So 20% of chemotherapy, 20% of radiation treatments, you're going to hit your $7,000 in a matter of a few months. You're going to be out of pocket that amount of money, guaranteed. So, you know, people that buy Advantage plans, oh, I'm healthy. You know, this is great. This is good enough for me. Well, I encourage people to look down the road, because it's those people that if they do get sick, they come crying, get me out of this thing. Well, once you're sick and you're diagnosed with a major condition, you have to go through medical underwriting at a later date to get a Medicare supplement. And you're making a lifetime decision when you pick, you want to stay with your original Medicare or your Medicare Advantage plans. Your Medicare supplement is guaranteed renewable for life. So you start a Medicare supplement, nobody can take that supplement away from you. As long as you pay the premiums every single month, nobody can cancel that out. Your Medicare Advantage plans, they change every single year. Every year, open enrollment comes up and everybody's advertising like crazy. You've seen the ads on TV. Justin's going to discuss that briefly. A major announcement that came out, I think it was today in the New York Times, regarding Medicare Advantage plans and all the problems that individuals have had with them. I can go back 3 years ago. I did a seminar live, you know, prior to COVID. One of the managers of the Virtua Billing Office came up and said to me, boy, am I glad you discussed those Advantage plans, because from our standpoint in the billing office, they're a nightmare for us to work with. They don't understand what we want when we bill it. They make it a lot more difficult for us to get, you know, what we need and get approvals. So Medicare with a supplement is without a doubt the best way to go. So that's, you know, coming right from Virtua Hospital telling me that. It just reinforces everything I've been hearing from doctors and people in the, you know, in the medical industry over the years. So I feel very comfortable discussing that.
Yeah, I guess I'll just jump in right here since you mentioned that report. I don't know if you can see this report, but it was from the Office of the Inspector General, which is part of HHS, Health and Human Services. It's dated April of 22, so it was just this month where this report came out. It's titled "Some Medicare Advantage Organization Denials of Prior Authorization Requests Raise Concerns About Beneficiary Access to Medically Necessary Care." So it's a long report. It's about 60 pages. I actually just released a video on our YouTube channel today. It's about a 10-minute video that explains the report in more detail. But just some very brief highlights. What they found in the report, they looked at a specific sample from, it happened to be June of 2019, just a random week of data. They took a random sample of all these prior authorizations and payments that were being denied by these Medicare Advantage plans, the top 15 companies in the country. And what they found was about 13% of the pre-authorization denials should not have been denied, essentially. The information was there to meet the Medicare requirements for approval, and they were denied. So about 13% of those denials should not have happened. And then on the payment side, out of the payments that were denied by the Advantage plans, was about 18% of those denials should not have been denied. So, you know, percentage-wise, it's not that they're denying a large percentage. It's actually a relatively small percentage. But when you look at how many people are on these Advantage plans, you multiply it out, it's a significant impact each year on both the prior authorization issues as well as potentially payment issues. So those are the highlights. But like I said, there's another video on our YouTube channel if you want more on that report.
Thanks, Justin. Okay, so how does a Medicare supplement works? So we're going to talk about a Plan F that has been the best plan since 2010. The government has stopped this plan for new people turning 65 2 years ago. If you're born 1954 or earlier, this plan is still available. And we still have a number of people that are retiring at 67, 68, 69, 70, in their 70s. I just had a couple today, 76, 75 years old, just retiring for the first time. And this is the plan they wanted, and it's available to them. So this is still available. If you're still working, you're going to be retiring, and you're born 1954 or earlier, it's still available. So what happens if you go in the hospital with just Part A? There is a deductible. It's $1,556. It's not going to be covered by your Medicare Part A. There's copays. After 60 days in the hospital, there's copays of $389 a day. That's not covered, and that could go up to $778 a day if you go another 30 days and get into your 60-day lifetime reserves. Why do you need a supplement? You go to the next column, you'll see that Medicare supplements will pay the deductible, they'll pay the co-pays. And so what do you pay? You don't pay anything. You're 100% covered any hospital in the country. I've had people go up to New York to Sloan Kettering. People go across the river. I've had people use Mayo Clinic. So if you have a very serious condition and you want to seek out maybe the best for that particular condition that you have, you can go wherever you want to and be covered. This is also great for people that want to spend the winters in Florida or maybe Arizona or someplace a little warmer than New Jersey. Your Medicare works wherever you are. So you got total freedom with Medicare A and B and a supplement to go anyplace. So it also covers skilled nursing care. You get transferred, but you have to be in a hospital bed for 2 overnights or 3 days. And if you get transferred, Medicare will cover the first 20 days, 100% under Part A. And then the next 80 days, there's a copay of $194.50 a day that's not covered. Your Medicare supplement will pay that. So you could be covered for 100 days in skilled care. That's one of the other big differences on a Medicare Advantage plan. The Medicare Advantage plan has to cover the first 20 days, just like Medicare, but they do not cover the next 80 days. You'll be paying $194 a day and on a Medicare Advantage plan if you went beyond the first 20 days. Now, the next slide is going to be what happens in Part B. Part B has a small deductible. It's $233. Your supplement will pay that. This Plan F will pay that deductible of $233. After you meet that, after you get through the deductible portion, Medicare is paying 80% of everything. And now the supplement picks up the other 20%. So what do you pay? You don't pay a dime. 100% coverage. You walk into your cardiologist office, you don't need a referral, just walk in. You lay down your Medicare card, your secondary card, and you don't pay a copay. You're 100% covered. You need a stress test. You don't have to get it pre-approved with Medicare. You go get the stress test. I had a stress test, and the cardiologist, I did it at Virtua. Cardiologist says, you look good, except for this little thing, and I just would like to have you got a nuclear stress test. I didn't need any special authorization to get a nuclear. I just went back, I don't know, a couple weeks later, I did a nuclear stress test and everything was fine, but I had to go through the whole procedure and everything. And, I didn't have any issues. Everything was covered, no problems. Plan F also covers excess charges. What are excess charges? If doctors do not accept Medicare, they have the right to bill, accept assignment of Medicare. They have the right to bill 15% over and above the Medicare approved amount. This supplement will pay 100% of those excess charges. There's only 2 supplements out there that pays it. It's this Plan F, and the next plan that we're going to talk about is it also covers it, which is Plan G. And then one other thing that the Plan F covers that's important to know is about the foreign travel. Your foreign travel is covered. This is important. Medicare does not cover anything outside the United States. You do get $50,000 lifetime benefit under your supplement plan. You have a $250 deductible and 20% of the amounts you're paying, and you have a lifetime benefit of $50,000. If you do want more travel coverage, we do have a great plan through Blue Cross and Blue Shield. It's a national Blue Cross plan called Geo Blue. It's on our website, and some people feel more comfortable to take the extra coverage for a few $100s more for a trip. So, that is available too as an option. Okay, this is the best supplement available today for people that are just turning 65. It's a Plan G. We've been using Plan Gs for several years because the difference in the cost between a G and an F used to be $300 to $400. And the only difference is on Plan G, the Plan G, everything under Part A is identical to the Plan F. The only difference is it doesn't cover the Part B deductible. Our friends in Washington felt the Plan F was too rich because you go from doctor to doctor to doctor, nobody's checking you. So they said, well, we're going to make it that no supplement can cover the Part B deductible going forward. So when you start using the Plan G at the beginning of the year, you will have to pay, you get balance billed. You still don't usually pay anything at the doctor's office, but you will get balance billed the deductible of $233. I had a test in January, and I eventually got a bill from the facility, and it was for $233. I paid it, and it was a colonoscopy I had, and so the doctor, the anesthesiologist, and everything else was covered 100%, except I put out with $233. And now after that, everything's covered 100%. For the rest of the year, I won't pay a dime for anything I do on a medical basis, whether it's doctors or tests, I'll be covered 100%. So the G is definitely a great plan, little difference in the plan F. And if you can't get the F, the G is the best way to go. The only other plan that we discuss is the plan N. It saves you about $35 a month in your premiums. You do have to pay the Part B deductible, and you will pay up to $20 per office visit and $50 in the ER. And it does not cover excess charges. So, you know, if by chance you have a doctor that wants to charge you over and above and hit you with the excess charges, you're going to be paying the 15% over and above on this plan, where the plan G and the plan F, you would not be paying excess. And one thing I do stress, people say, well, $35 a month, even 40 in some cases. Boy, that's a lot of doctor visits. I go to doctors twice a year. This is good enough for me. But again, think long-term. You know, you got a knee replaced, hip replaced. You got to go to physical therapy 2-3 times a week, and you put out those $20 each time. That's one thing. I did have an individual 4 or 5 years ago. I was writing a policy of Plan G for his wife. He sat in. He was much older. And he said, boy, the G sounds great. I said, what do you guys? He says, I got a Plan N with United Healthcare. I said, well, there's nothing wrong with an N. He says, it's going to cost me $300 to $400 a month and co-pays. I said, how can that be? He said, I had a stroke, and it's going to cost, I want me to go physical therapy, speech therapy, occupational therapy. Then we do all these therapies. And I added up all the co-pays, and it could be $300 to $400 a month. You know, my jaw dropped because nobody ever thinks of that. So, you know, there's nothing wrong with the N. It's a heck of a lot better than a Medicare Advantage plan. But we tend to like the Plan G is the best plan to go with, or the Plan F if you're still eligible for it. So when can you get a Medicare supplement with no medical underwriting? It's 6 months after you get your Part B effective date. So if you turn at 65 and you sign up for your Part B, you have 6 months where you're guaranteed issue to buy anything you want. Nobody can turn you down. If you're retiring and you're 70 years old and you just getting your Part B for the first time, you're guaranteed issue your Medicare supplement, no questions asked, no medical underwriting. If somebody who had Social Security disability, they're under the age of 65, in the state of New Jersey, there's only one Medicare supplement plan available to you under the age of 65. Well, when you do turn 65, you have the right to change that. You have a 6-month window to make a change and get a different supplement plan, maybe a little bit better and hopefully less expensive than the plan you're currently on. So that's another opportunity that you can get in with an open enrollment period to get a Medicare supplement. All right, I'm going to turn over to Justin now. He's going to get into the drug card and the importance. And this is a very important part of your decision-making process when you go in on Medicare.
Thank you. And thanks for the great overview of all the different parts and the supplements. And I just want to remind everyone, if you do have any questions, use the Q&A window in the Zoom session. We're happy to answer those throughout the meeting here. If you have the question, there's chances are someone else has the same question. So feel free to type that in the Q&A window. We've covered a lot of ground so far, the different parts of Medicare, the when you should be signing up for Medicare, how much you pay the government for Medicare, the differences between supplements and Medicare Advantage plans. We also got into some detail on the specific the supplements that are out there that are the most popular, that Plan F, Plan G, and Plan N. So covered lots of ground. Again, feel free to type in any questions in the Q&A window. Now, I'm going to walk through now the Part D prescription drug coverage. So there's a tool that we use. It's on the Medicare website to pick the most cost-effective drug plan for each individual when they go on Medicare. And I'm going to show you the demonstration of that tool in a minute. But before we do that, I want to explain how Medicare Part D works. So you have a foundation, a framework. So when you start seeing some of these terms, when we look at the tool and the pricing for different drugs, some of this can be very confusing. This kind of framework does not apply to any other prescription drug coverage, no group insurance or individual insurance. So I want to explain how this works before we get into the live demonstration of the tool for how to pick the plan. So with Medicare Part D, this chart shows us there's 4 different steps, if you will, with the Part D drug coverage. The first one is the deductible. Then we have the initial coverage level, the coverage gap, also known as the donut hole, and then catastrophic coverage. So I'm going to walk through each of these steps. The first one, for the deductible, these drug plans can have a deductible up to $480. So it could be 0, it could be 200, but it can't be any higher than 480. I will tell you the large majority of these, there's about 25 different Part D plans, have a $480 deductible. Now, the deductible generally does not apply to the lower tier drugs. So if you have just like tier 1 generic drugs, you might pay a $0, $1 copay or very low copay for those low tier drugs. But if you have higher tier drugs and your plan has a deductible, you have to pay the full cost of the drug until you've met that calendar year deductible. So that's when that deductible comes into play. After the deductible comes the initial coverage level. The majority of people, 85% roughly, are never going to get past this step 2. Okay, most people do not have very expensive medications. The initial coverage level, you just pay a copay or co-insurance for your medication. So you could be a $5 copay, $10, $40, if it's a co-insurance, maybe, a 30% or something for your drug, but you're going to pay that. That's going to feel kind of similar to a group insurance type plan. And you're going to stay in that initial coverage level as long as your drugs are less than $4,430 based on the retail, the total cost of your drugs for the year. So again, about 85% of people, they don't spend full cost of their drugs is less than that for the year. It doesn't mean that's what you're paying for your drugs. That's the full retail cost of the drugs you're consuming for the full year. All right. Now, if you fall into that 15% that has very expensive medications and your drugs exceed that $4,430 retail, that's when you fall into this step 3, which again is the coverage gap, also known as the donut hole. And years ago, you'd have to pay 100% of the cost of your drugs in this donut hole. Very expensive for people that had expensive medications, but the way it used to work. It still can be costly, but now it's down to 25% the cost of the drugs while you're in this coverage gap. That's what you would have to pay if you reach that coverage gap. Now, again, only about 12% of people reach the coverage gap, but there's also protection on the other side of the coverage gap, which is called catastrophic coverage. And only about 4% of people actually get to this step. They'd have to have very expensive medications. And if you reach catastrophic coverage, you basically are paying 5% the cost of your expensive drug. So, you'd have some sort of copay for the drug, for an expensive drug, and then it would go to 25% when you reach the coverage gap, and then it would drop to 5% if you reach this catastrophic, which again, a very small percentage of people actually reach this catastrophic level. People ask the question, well, how do you get to catastrophic from the coverage gap? Can I just subtract these numbers? Unfortunately, it's apples and oranges. It's about $4,430 to retail cost to get into the coverage gap. And then to get out of the coverage gap into catastrophic, it's another government acronym called true out-of-pocket cost, which does not mean what you think it means. Normally, we think of out-of-pocket costs like what you actually spend for your drugs. But that $7,050 number, and not to confuse you further, but that $7,050 number includes everything you've spent for your medications throughout the year, plus it includes the pharmaceutical discount for those brand name drugs while you're in the coverage gap. That's 70% discount that they're doing on those brand name drugs. So rather than get too confused with the equation there, what I tell people, if you have expensive, and if you have expensive medications, we run a full detailed report and we can tell you month by month when you're going to be reaching each of these phases, how much you're going to be paying for your drugs, and so forth. But just to give you rough numbers, if you have very expensive drugs, you're probably going to spend about $1,000 to $1,500 of your money to get into the coverage gap, and probably another roughly $1,000, $1,500 or so to get out into the catastrophic level where you start to pay 5%. So you're not actually spending $7,000 of your money before you get to this 5% catastrophic. I hope that helps. I know it can be very, very confusing with these different levels. I'm going to give one quick example just to show the initial coverage to the coverage gap. And I see there's a question in the chat, so I'll get to that in a second as well. If you take, let's just use one medication for simplicity. Anything you see a commercial for, those are the expensive drugs. They're brand name drugs and they don't have a generic alternative, right? Those are the ones these pharmaceutical companies are marketing on the commercials. So I'm going to use a popular heart medication, Xarelto or Eliquis. Those drugs, the retail cost is about $500, $550 a month retail, okay, for that Eliquis. Now, while you're in the initial coverage level, you might have a copay that's $40 a month, right? So let's just say for simplicity, your plan doesn't have a deductible and you go to pick up the Eliquis in January, you're going to pay that copay, the $40 a month. February, you're going to pay $40 a month. March, April, May, June, you're going to keep paying that $40 a month for that Eliquis. And then you're going to get to, let's say, September. And now you're 9 months into the year and you've been picking up that Eliquis every month. Well, 9 months times, let's call it $500 a month retail cost is now $4,500 retail, right? So now you go to pick up that same medication in September, and instead of that $40 copay, you're going to be charged $130, right? Roughly, it's 25% of that $500 retail cost, right? So that's how this donut hole or coverage gap works. You pay that $40 a month, and then you go towards the end of the year, all of a sudden your costs could jump up like that with the Eliquis, for example. I'll also say there, because the coverage gap has gone all the way down to 25%, we've seen some strange scenarios now where your coinsurance could actually be higher in that initial coverage level. And when you reach the coverage gap, you could your drug costs could actually drop because that 25% could be lower than your coinsurance. So again, I know this can be very confusing. 85% of people don't have to worry about that step 3 or 4. It's really just the folks that have those expensive medications. So I'm going to shift over and do a demonstration now. Let me just see what the question is. All right, so there's a question, and just for anyone asking, please use the Q&A. It's a little easier to track for us in the Zoom, but please reiterate the deadline for getting into Medicare based on turning age 65. Begin receiving Social Security payments. What happens if you do not begin receiving Social Security until age 70 and continuing working till 85 with group insurance? Okay, so there's lots going on in that question, but there is no deadline. So in that example, if you're turning 65 and you're staying on the group insurance, and assuming it's a large group insurance plan, 20 or more, like a Virtua Hospitals plan, you don't have to do anything at 65. There's no deadline because you don't have to do anything. If you want, you can sign up for Part A in that scenario, but there's not a deadline because there's no penalty for not signing up for Part A. Your deadlines would come in this example or question once you leave active work at 85. You have in theory, you have an 8-month window at that point to sign up for your Medicare Part B. However, we would never wait 8 months because you don't have coverage for that 8-month period. You'd want to start this before you leave work at 85 and get everything teed up so there's no gap in coverage when you leave work. So I hope that helps answer your question, Thomas. Okay, we're going to move on now back to the Part D. We're going to do that demonstration now. So I'm going to stop sharing this and I'm going to go to the web for a second here. 1 second. Okay. You should be able to see my browser now. If you can't, someone just chime in. But we're looking at the Medicare website. Okay, so if you go to medicare.gov and you click, there's a button here, right here, this Find Plans button. This is going to take us into it's called the Medicare Plan Finder tool, which allows us to pick the most cost-effective Part D prescription plan. And this is it. It says find a Medicare plan. And there's two ways to use this tool. One is with an authenticated user, which authenticated means you have a mymedicare.gov account. And if you do have a MyMedicare account, you should use it for this because it saves the drug list. That way you don't have to keep re-entering it year after year. For the purposes of this example, we're going to continue without logging in. And it asks you a couple of quick questions. But we're just, for the purposes of what we're looking for a Part D plan. That's what we're reviewing right now in the presentation, and how to pick the most cost-effective Part D drug plan. It asks us to put in our zip code. I'm just going to use our office up here. Actually, we'll use the one down in 08057. It's not going to make a big difference really. Do you get any help from any of these programs? Medicaid, et cetera. For this example, I don't get any extra help. That would be for like lower income. Oh, I was doing some examples earlier, but okay. So this is where you would add your medications in for the example. And you just hit add a drug. And I'm going to put in for the first drug, just a very common blood pressure medicine, a generic lisinopril. The first example is going to be 2 low-cost generics, and then we'll do a more expensive example so you can see both how this works with the tool. I don't know if you noticed that when I started to type in a few letters, it starts to fill in the list. So you don't have to know the exact spelling of the drugs, which is nice. It kind of pre-fills for us as we start typing. You click add drug, and then it asks us for the dosage and the quantity. So this person will just take the least dosage, 2.5 milligrams once a day, which is 30 per month. Add to my drug list. I'm going to add another drug, a popular cholesterol or common cholesterol medication, which is Crestor. Now watch what happens. This is the brand name drug. When I try to add in the brand name, the tool stops me and it says, hey, there's a generic available. Are you sure you want to put that brand name in? And what I'll tell you is in almost every single case, there are a few exceptions, but almost every case, if there's a generic available, these Part D plans are not going to cover the brand name drug. So, and this is one where I know for sure Crestor is not covered on any plan. So we're going to put in the generic rosuvastatin calcium. Also, we'll take the lowest dosage, 5 milligrams once a day, which is 30 per month. And we're going to add that to my drug list. So now my drug list is complete. For this example, this person just takes 2 medications, blood pressure and a cholesterol medicine. We're going to hit done adding drugs. Now we can select our pharmacies. Earlier I had selected a CVS and a Walgreens, but we can do up to 5 pharmacies or 4 in a mail order. We'll do 4. We'll throw in a Rite Aid and then like a local pharmacy as well. And we'll leave in the mail order pharmacy, and then you click done. So now I've given the tool all the information it needs, the drug info, the pharmacies, and so forth, to figure out which of these Part D drug plans is going to be most cost effective. And it's already come back with the results. So there's 23 different plans available right now for these Part D drug plans. And the list is already calculated and sorted based upon that information I entered. And the way it's sorted is by lowest drug and premium cost. Very important. We're not just looking for the cheapest premium, right? The lowest premium plan. We're looking for the lowest drug plus premium cost, right? So we want to find the lowest total for the year. And this tool did all that work. It calculated the total based upon my drugs for all 23 of those plans. And then it sorted the list based upon that lowest total cost for the year. The plan that came up most cost effective, it's called SilverScript Smart RX. It happens to be the lowest premium plan for this example, which is $7 a month. That's the premium for the Part D coverage. And but the way we pick the plan is based upon this number, which is the total cost. And this is for the rest of the year. The tool always calculates as of the first of the next month. So there's only, 6 months left in the year, 5 months, May 1st through, where's that, 7 months. May 1st through December 31st is what's calculated there. So that $72 includes the $7 a month premium for those months. And then it also includes the copays, if there's any copays for those two medications. That's all in that one number. And then if you scroll, and you can see there's a $480 deductible, but you can tell that doesn't come into play because these are lower tier drugs. The next plan in the list would be WellCare value script for these two drugs, slightly higher premium. The total cost for the year, again, is what we're looking at, the $135. Then there's a Humana plan, $215, Horizon, $276, and so forth. So it doesn't mean these other plans are bad plans. They're just, for this particular example, they're not cost effective. So we really pick the drug plan based upon the information we know at any given time. Every one of these Part D plans has to cover at least 2 drugs in every therapeutic category. So even if you get prescribed a drug in the middle of the year, there's a high probability it's going to be covered on any of these Part D drug plans. So we don't recommend overpaying in premium. You're not necessarily going to have a lower copay for your drugs. It just kind of depends on which medications you're prescribed. So here's the same example. I just went to the third page to show you the bottom few plans, right? The bottom 3 plans out of those 23. You could see the one that came up worse is this mutual low mile plan. It's $91 a month. And the total cost is almost $1,200 for the rest of the year. So the premium's higher and the copays happen to be higher as well for that particular plan. Here's another one, AARP preferred, $100 a month in premium, and the total would be like $863 for the rest of the year for those, the drug and premium costs. So it really, again, these are very inexpensive drugs. So when we add in some more expensive drugs, we'll get to see a little bit more variation in cost between the best and the worst plan for that scenario. So just going to show you a little bit more detail on this plan. So you can click this plan details button and you get a lot of granularity here that shows us in the report at the top. Again, it repeats the premium. Now it shows us that drug costs for the rest of the year. It's $16 for the rest of the year for those 2 medications. So that's all included in that total. That $72 number was the $7 a month plus the $16 drug cost for the rest of the year, adds up to that $72 for the year. If you keep scrolling through, it shows us for each of those pharmacies, which ones are in network, which ones are out of network. You can see for this particular plan that local looks like it's in network, but standard. The CVS is a preferred pharmacy. Walgreens is out of network, so you can't use this plan there. If you go with this plan, Rite Aid is in network also, but standard, meaning the copays are going to be higher. And then mail order is also a preferred option with this plan. The next set of tables in these reports show us yearly drug cost by pharmacy. So for each of those options, for each of those drugs, it shows us what the yearly really means rest of the year, just to be clear. But like lisinopril, $8, and the Crestor, $8 for the rest of the year, which if you look at it, it's 8 months. It's $1 a month essentially for each of these drugs. And we'll see that as we scroll down further. But here's that $72 a month, again, estimated drug and premium cost. That's the number we use to pick the plan, find the lowest cost for the year. Then it gives us information. You won't meet your deductible based upon these medications. If you had higher cost medications, it would show us when you're going to meet the deductible and so forth. You won't enter the coverage gap. Again, if you have higher cost medications, it'll tell us when you would enter the coverage gap here. Estimated total monthly drug cost. So now it's just breaking it out by month. It's a very linear equation here because they're very inexpensive drugs. The next example we'll see where it's not linear. It's going to fluctuate each month because of that deductible and coverage gap and so forth. But this case, it's really $2 a month for those medications. And then you could go to each pharmacy to break it down even further. And here's where you finally get to the copays, which again are $1 a month for each of those, which is the total of $2. So each table is kind of a subset of data from the tables above. So we keep kind of getting more and more granularity and detail in these reports, which are very powerful. Lots of good information in here. Again, this is a pretty simple example with 2 inexpensive drugs. When we add in some more drugs, it'll get a little bit more complicated. So I'm going to quickly go back and show you that second example. with the other medications. So we're going to go back to drugs and pharmacy. I'll leave these drugs in there, and I'm certainly not a doctor, so I don't know if any of these drugs conflict with each other. This is just purely from a financial perspective. We're just looking at how this tool works. I'm going to add 2 expensive medications. Again, I mentioned that Eliquis earlier, which is a popular heart medication. We'll just say that 2.5 milligrams twice a day, 60 per month. And then we'll add in one other one that's expensive, Invokana, I believe is a diabetic medication. And we'll just take the default 300 milligrams once per day. So now we've got 4 medications in our list with the 2 inexpensive ones and then the 2 expensive drugs. And let's see what that does now to our results when we get to that results page. And then we'll also go into the details again. So now we have a new plan that's saying most cost effective because we've added on some pretty expensive drugs. And in this case, it's this Horizon Enhanced plan, which has a much higher premium, right? Almost $100 a month in premium, but that's not how we're picking the plan. Remember, this is the number, the total premium plus drug costs for the year, which is roughly $2,300 for this example. And this is the lowest total. So that's why this one is most cost effective in this example. And this one happens to have a 0 deductible, which, by the way, even if it had a deductible, that's included in that number. So I'm not really worried with that because that's already factored into that total number for the year. So as we scroll down, the second one would be the Cigna plan, which is a little bit higher, $2,328. Keep going, $2,384. Let's just go to the bottom of page 1 and see how high that number gets. Okay, so now we're up to $3,000, right? We're still in the top 10, and we're $700 more for this WellCare plan with this drug list. Let's go to the last page, right? The bottom 3 plans for these medications to see, look, $10,000, right? So we went from $2,300 for the best one to over $10,000 for this plan, $8,000 for that other plan, right? $7,500 for the mutual OMOP plan. So, it's really important that each year, not only the first time you go on Medicare to review these Part D drug plans to pick the most cost-effective drug plan, but then every year you have an opportunity between October 15th and December 7th to review these drug plans to pick the right drug plan for the following year. Now, I will say, if I mentioned earlier that if you get prescribed a drug in the middle of the year, there's a high probability it's going to be covered on any of these Part D plans. If for some reason the drug that you're prescribed is not covered, you have 2 options with your current plan. Number 1, you can go back to the doctor and see if one of those other 2 drugs would work for you. And number 2, if one of those other 2 drugs would not work for you, you can have the doctor file for an exception to get that drug approved, at least to get you through the end of the year when you could switch the drug plan for the following year. Okay. So I want to just show the detail now for this plan, for this expensive example. So we're looking at now the Horizon Enhanced plan, which came up most cost effective with these 2 expensive drugs. And at the top, it shows us again the monthly premium, which is about $100 a month. And then the drug cost for the rest of the year, which is roughly $1,500 for the rest of 2022. And then it gives us the same information again for each of those pharmacies, which are in network. It breaks down the yearly drug costs by pharmacy. So now you can see these expensive drugs for the rest of the year come out to about $700-800 in drug cost. In this example, the inexpensive drugs happen to have a 0 copay. The other plan, they were like $1 a month. But what we're looking at is the total really when we pick these plans. So if we scroll down further, we get that estimated total drug and premium cost, which again, this was that 2,300 number or 2,200 number we saw on that summary page. And this is where it shows us when you're going to reach that coverage gap. Remember that donut hole we talked about? Well, in this example, again, this starts May 1st. This example, if he fills his drugs each month, he's going to reach that coverage gap by August. So May, June, July, And then August, the 4th month, is when he'd reach that coverage gap. We're going to see that in the pricing by month as well. And this person will not get out of the coverage gap, which would be that catastrophic level where you only pay 5%. So we only have, again, about 7 or 8 months left in the year. In this example, they're going to reach that coverage gap in August, pay that 25% for the rest of the year for their drugs. So now this is the estimated cost by month, where we'll see that fluctuation in drug costs. The first couple of months, he's just paying those copays for those drugs, which total to about $80 a month. We're looking at the CVS or Walgreens numbers here. Let's look at Walgreens, as that's the lowest one. And then by the 4th month, he's paying that, he's starting to hit that coverage gap. So this is like a blended month where he's paying partially the $80 copay and he's a little bit into the coverage gap. He's fully into the coverage gap by September. Now he's paying 25% the cost of his drugs, which comes out to this $280 per month. All right. And we're going to see these numbers again when we look at it for the specific drugs at Walgreens. This shows us now those 4 medications. What's that retail cost of each of those drugs? What do they pay after? There's no deductible with this plan. So this is that $40 a month or $80 total, right, that we saw for those first few months. And then once they reach the coverage gap, they have to pay 25% of that retail cost. And that's where that 280 number comes in, right, for those months starting in September through the rest of the year. Okay, so that's how that coverage gap works, and how this, again, a lot of great detail in these reports when you run this analysis. This is something, again, we do for all of our clients. It's available to the public. If you want to do this on your own, that's why we walk you through it. But this is something we do when we initially sign someone up, and then every year we send out reminders in September, again, to get the latest drug list, because these drug plans change every year. Even if your drugs don't change, the Part D plans change, the formularies change, the tiering of drugs, the premiums, the copays. So your drug plan that might be cost effective one year might not be cost effective the following year. So that's a little demonstration of, again, it's called the Medicare Plan Finder tool to help you pick the most cost effective drug plan. So I'm just going to jump back now to the slides here quickly. Okay, again, if you have any questions, feel free to type them in the Q&A window. I'm going to move now. We're still under prescriptions, but I'm going to talk about some prescription assistance that's out there. I'm going to start actually at the bottom of this slide. These programs here are state assistance programs called PAD and Senior Gold. PAD is prescription assistance for the aged and disabled. And these are great programs. If you qualify, they're for lower income individuals, but they did increase these thresholds. For PAD, for example, it's about $39,000 for single income and about $45,000 for married. So if you're in retirement and your income is going to drop to those levels, PAD is a great program where the state basically pays. You have to apply through the state Medicaid office, but they pay for your Part D premiums. And then they also pay for your copays. The only thing you have to, or coinsurance for your drugs, the only thing you pay is basically a $5 copay for generics and up to $8 for brand name drugs if you qualify for PAD. Senior Gold is the next step up for that. If your income's a little bit higher and it's not quite as generous, they don't pay for your premium for the Part D, but they do reduce some of your costs if you have expensive medication. So those are great programs. Again, they're just state assistance programs for the state of New Jersey. Each state, if you're in another state, each state has their own types of programs similar. These other links here you see are other programs out there that are like coupons. These are not prescription drug coverage, but there are situations where even with a Part D prescription plan, some of these coupons have lower drug costs than your prescription drug plan. I'll give you, the common examples we see are like inhalers, certain creams, like lotions and creams can be very expensive on Part D, where those coupons on these other websites may save some money rather than using the Part D plan. Again, these are not insurance. I would not recommend these instead of a Part D drug plan. But if you have a very expensive drug, or cream or inhaler, or it's possible you find a lower cost with these coupons. All right. So that covers the section on the Part D prescription coverage. I just want to recap now the top 5 mistakes people make on Medicare. These were touched on throughout the presentation. And again, I'm just going to quickly recap them. So The first biggest mistake we see people make is not enrolling in Medicare Part B on time. So this is really for those people that don't have the group coverage, or they really need to enroll during that 6 or 7 month window around their 65th birthday. That's the initial enrollment period, and that's the time that people have to enroll if they don't have that group coverage. Now, the opposite is also true. We've seen situations where people working at a large company like a Virtua are still working, and they're told or scared that someone tells them they have to sign up for Medicare, and they sign up for Medicare A and B, and they're paying their Part B premiums, and they're still working. Now they're 70, and for 5 years they've paid these Part B premiums as a secondary benefit to their employer plan, which is just really doesn't make any sense. You're paying all that premium to the government for something you're never going to get paid back in claims. It's not going to make fiscal sense at all. So, we say not enrolling in Part B on time. It's enrolling, missing the window if you don't have other coverage, but it's also enrolling too early. If you're still working and you're staying on that plan, it just really doesn't make sense to enroll in the Part B and pay all those premiums. So the second biggest mistake we see people make on Medicare is not analyzing their prescription drug costs. So we talked about this. I just showed you a demonstration where if you have expensive drugs, it could very well be thousands of dollars difference picking, the best plan versus the worst plan for your list of medications. We say 30 different, each year it varies, and even throughout the year it can vary the number of those Part D drug plans that are available. Right now, as we just saw, there's about 23 available. The formularies, which are that's the tiering of the drugs, and the drugs that are covered on each of those plans is the key. That's the important part. The tool that we use is on Medicare.gov. That's the Medicare Plan Finder. And then once again, each year, once you get on Medicare, you have an opportunity between October 15th and December 7th to review your drug plan for the following year. All right. The third biggest mistake we see people make on Medicare is not understanding the difference between Medicare Advantage and Medigap or Medicare supplements. All right. A lot of people think these terms are the same. Oh, I have a supplement, and you start asking about their coverage, and what they really have is an Advantage plan, and even potentially vice versa. These are two very different types of coverage, as Doug walked through the differences. The Advantage plan, again, is the fully privatized plan. That's the one where the insurance company fully takes over and manages your benefits for you. It's managed care. You're no longer on Medicare when you sign up for a Medicare Advantage plan. That red, white, and blue Medicare card, don't throw it away because you might need it in the future. But essentially, as long as you're on the Advantage plan, you're not using that red, white, and blue card at all for anything. All right. With those Advantage plans, you have networks and potentially referrals required. Remember, the max amount of pocket is up to $7,500, $7,550 per year on those Advantage plans. You can only change them during annual enrollment each year. The Advantage plans can offer extra benefits. So this is what we see our good friend, Mr. Joe Namath, on the commercials every other hour discussing these extra benefits, right? You can get dental cleanings, vision exams, rides to the doctors. They're getting really creative on how they can market and what they're marketing in those Medicare Advantage plans. Those are extra benefits that are not included with original Medicare. What they don't really talk about in those commercials is the actual medical coverage you'd get with those plans, and the managed care aspect, those prior authorizations that we talked about earlier in the report the government released this month regarding those denials for prior authorizations and so forth. So again, two very different types of coverage. We recommend looking at the overall picture, the overall expense. We do offer both of these plans. I don't want to get you wrong here, get us wrong here. We offer Advantage plans if people would like to go that direction. The vast majority of our clients do go with Medicare supplements and Medigap plans because it's much better coverage, much more flexibility. You don't have the headaches that we talked about earlier with the prior authorization issues and so forth. So we have a question that's come in. Someone's asking if the presentation will be available. We will send out the recording So you will get that. Yes, we'll send out the link to the recording after the video. All right, so the fourth biggest mistake we see people make on Medicare is not analyzing retiree coverage. So this really only applies to people that have a retiree option. Virtua does not offer that, but you may have a spouse that is a teacher or works for an organization that has a retiree plan option. And a lot of cases, there are situations where retiree plans could be great for the individual. For example, a teacher in New Jersey, if you work 25 years, you essentially don't pay a premium for the retiree coverage, and you're probably going to keep that coverage as it's a zero premium plan. But if you're a teacher for 20 years, for example, that same coverage is roughly $400 a month for the retiree benefit, right? So in that example, it may not be a benefit. And we see people that don't analyze these things and just assume it's good for them because it's a retiree benefit. In those examples, there could be a better option for them going out and getting their own supplement and drug plans and so forth. And the fifth biggest mistake we see people make on Medicare is listening to friends and family. And we joke about, and I'd add in now Joe Namath, listening to Joe Namath, or Jimmy Walker, or William Shatner. If you've seen all these great new commercials that come out, listening to any of them would fall under that fifth biggest mistake we have here. With Medicare, everything's individual. You really want to pick the right coverage for your situation, especially with things like the drug cards. We talked about, we showed you some examples where it really depends on your medications as far as which of those plans is going to be most cost effective. We get calls from people all the time that say, I want such and such plan. It's what my spouse has, or my brother has, or my cousin has. And, we tell them, well, we can enroll you in that plan, but we really recommend reviewing your situation to make sure it's the right plan for you. So that's the fifth biggest mistake we see people make on Medicare. So, and that is our presentation for this evening. I'm going to just wait a few minutes here for Q&A. If anyone else has any questions, you can type those into the Q&A window. We hope you found this session valuable information. Again, this is purely educational. We just want to give you the information so you understand how Medicare works. When the time is right, obviously, we'd love for you to reach out to us, or if you have questions before then, just about anything we've gone through in the video. You've got all of our contact information here on the slide. I do recommend, if you found this informative, you subscribe to us on YouTube, follow us on Facebook. You can follow us on LinkedIn. If you use any of these media sites, that's where we send out our latest updates. For example, I mentioned, there's a new video that just came out today on that report we talked about earlier, but we're constantly updating videos there, probably once to twice a month, just depending on what's going on with Medicare and so forth. So once again, I hope you found this helpful. As Doug mentioned earlier, there's no fee to work with us. So if you do want to reach out to us just for a general question, or you want to work with us for your Medicare plans, which is what we'd like when the time is right, there's no fee at all. So we basically, the way we operate, we do get commissions from the insurance company when we help you enroll in a plan, and you pay the same premium whether you go directly to that insurance company or you work with a broker. So there's really no cost to you to work with us. Again, we do that annual review every year of the prescription drug plan. There's no cost to you for that. And we work with all the A-rated insurance companies. So we're not captive to a particular company. We work with United Healthcare, Aetna, Blue Cross, Cigna, Mutual of Omaha, Humana, WellCare. I mean, pretty much every A-rated company, we can look to find the best plan for your situation. I do see we've got some questions that have come in. Okay. What's the best drug plan if you don't take any drugs? That's a great question. And I'm going to add to that question, actually. With the other frequently asked question is, if I don't take any drugs, do I need a drug plan? So that's not your question, Maureen, but I'm just going to answer that one as well, because we do get that question a lot. So first of all, do I need a drug plan if I'm not taking any drugs? Well, yes. And there's two reasons why. Number one, if you do get prescribed a drug in the middle of the year, you're going to want to have some coverage if it's an expensive drug. We looked at the Eliquis or that Invokana. Those drugs are $500-600 a month. If you have no coverage, that means you're paying the full $500 or $600 a month for those expensive medications. The other reason you want a drug plan, even if you're not taking any drugs, is the government actually charges a penalty. It's a 1% penalty for every month you don't have a Part D prescription plan when you're supposed to have one. All right, so if you waited 3 years, for example, you'd pay a 36% penalty on your Part D premiums, not for 1 month or 1 year, but for the rest of your life. The government would charge that penalty on your Part D premiums. A late enrollment penalty is what it's called. And again, I didn't get to your question yet, Maureen, but so what's the best drug plan if you're not taking any drugs? Well, we just recommend the lowest premium plan. It's that, in that example we looked at earlier, it's called SilverScript, and that's just for this year. That could change each year, but it's only $7 a month, right? So for $7 a month, you're avoiding that penalty and you're giving yourself drug coverage. So if you do get prescribed something in the middle of the year, there's a high probability it's going to be covered on even on that $7 a month plan. So that's what I would answer that, Maureen. The next question from Aboguts, do you recommend making an appointment 3 months before turning 65? I assume you're referring to an appointment with us by your question. I'm not sure. What I would say is we recommend if you're still working and you're going to work past the age of 65 and you have questions, 3 months before 65, you can certainly reach out to us and we're happy to have a phone call and kind of go through those questions. If you're going to work past 65 and you're covered on Virtua's plan, as Doug mentioned earlier, you're probably better off just staying on the Virtua plan. It's just optional whether you want to do the Part A or not at that point. But the short answer to your question is yes, you can reach out to us 3 months before 65 and we can kind of review that again with you and go through your specific situation. For example, if you're part-time, as Doug mentioned, and you're paying more for that plan, you may be better off going on Medicare. So we can certainly have that discussion 3 months before. That's a good time to reach out. Yep. We have one more chat. Oh, please read it. Oh no, that was just a comment. Okay, you're welcome, Patricia. We'll give it up one more minute here, see if we get any other questions. Doug, do you have any other comments while we're waiting?
I just want to jump in and reiterate what you said about we're there to help you answer your questions. Since that COVID came, it's been surprising over the last 2.5 years. COVID hit and we started getting a lot of people that were over the age of 65 that were laid off or out of work and just saying, I'm not going back. And we were getting a lot of people, going on Medicare, and we were doing everything over the phone and on the internet, and all the insurance companies have set up online enrollments now. We just put in the application, and within 24 to 48 hours, the people are covered and issued. So things have changed dramatically since this COVID. Probably 99% of our business now is done just via the phone, and but you are welcome to schedule an appointment and come in. You come into our office in Moorestown, or if somebody happened to be in North Jersey, we got the office up in North Jersey also. So it's whatever more comfortable for you. So, but again, simple questions that you have, always feel free to give our office a call. We're more than happy to help you.
Yep, and we actually just got 2 more questions as we're going through there. So Thomas asks, when do you have to sign up for a drug plan, Medicare A or Medicare B? All right, so Thomas, I guess again, you had a kind of a follow-up, I think, earlier about working. It depends on your situation. So in your question earlier, you said if you're working to age 85, when do you have to sign up for the Medicare and the drug plan? Would be when you leave your work plan. So we recommend at least 6 to 8 weeks before you're leaving work is probably a good time to reach out. The earliest the government will let you do anything is 3 months before your requested effective date in that scenario when you're retiring after age 65. So that's really, when, okay. And then you just asked to follow up, what if I get a plan at age 65? Plan A, I think you mean Part A. Yeah, so if you're enrolling in Part A, you could do that anytime. So there's no deadline, and once again, for Part A, because there's no penalties if you don't enroll in the Part A. So if you want to do the Part A at 65, you can do it 3 months before is the earliest you could do that, and it would be effective the month that you turn 65. So I hope that helps, Thomas, your questions. Let's go to Maureen now. should get Part D when turning age 70, even if you're still working. Okay, no. So if you're still working and you're covered again on a large group plan, and you have, it's what's called creditable prescription drug coverage, which basically means it's as good as Medicare's drug coverage. And if you're on those group plans and you're past 65, you should be getting a letter every September from the group plan. It's a, it's like a one-page form letter that says your group insurance prescription coverage is creditable drug coverage for Medicare. And basically that's just telling you that it's as good as Medicare. The point of that letter is you don't have to do anything with Part D drug coverage as long as you have that employer drug plan. So if you're working past the age of 70, there's no reason for you to sign up for a Part D prescription plan if you've got the employer drug coverage. Hope that helps, Maureen. All right, Thomas asked another question. So I am only required to get the drug plan without penalty until I sign up for Part B. No, I don't. I answered for Marie. You don't have, if you have a group insurance plan and you're working past age 65 and the company has more than 20 employees. So we're using Virtua as the example. I think most of the folks on are from Virtua. You do not have to sign up for anything with Medicare, A, B, or D, period. If you want, you can sign up for Part A of Medicare. It would become a secondary hospital benefit. There's no premium for that. And you'd get in the system, you get your Medicare number and so forth. But the other parts are not required if you're staying covered on the large group health plan and you're still working.
Yeah, you might want to mention when you do lose your group drug card, your group health insurance, you have a 2-month window to get a drug card. If it's in the middle of the year, you fall under a special election period to get a drug card in mid-year because you've lost your group benefits. So you must sign up within 2 months after losing that your group drug card. If you miss that window, you have to wait till the annual enrollment period in October to sign up for the following year. So don't make that mistake and not sign up for a drug card when you first are eligible for one.
Yeah.
So that's important.
Yeah, that's a good point. I mean, it gets confusing because you have an 8-month window to get that Part B after you leave work after 65, but you only have that 63-day window, as Doug pointed out, to get the drug plan. But once again, 63 or 8 months, 63 days or 8 months, it's really irrelevant. What we want you to do is reach out before you're leaving, right? Because we want to line everything up so there's no gap in coverage. We don't want to use the 8 months. We don't want to use the 63 days, right? Because that means you don't have coverage for those 2 months of drugs or 8 months of medical coverage. So those are kind of emergency situations where you've forgotten or you just didn't enroll. But really the goal is before you're leaving the company, ideally 6 to 8 weeks before, we start planning this stuff out and lining it up. So when your other coverage ends, your Medicare starts with no gap in coverage.
Yeah, if you're going to have to get Part B, you have, let's say you're 67, 68 years old, retiring, you already have your Part A, which would be great. I would say, please call us, 3 months, 2 to 3 months. We'll get you the form that you need that Virtua has to complete, that you're going to bring to your Social Security office so that you're all set up for the date you leave the group benefits, that your Medicare Part A and B are both in place, and we'll have a Medicare supplement and a prescription drug card all coordinated to start the exact same date as your Medicare, and it'll be a smooth transition. All right. Okay. So again, thank you, everybody. Hey, Justin, nice job. Great job as usual. And again, we're here to help you. If you have any questions come up, we have a great relationship over the years with Virtua and all their employees. So, please feel free to give our office a call.
Yep. Thanks, everyone, for joining. Hope you have a great night.